What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're going to unpack the art of harmonic technical analysis to potentially predict where the markets might head next week. But before we dive into those charts, let's talk about some key events that are on the calendar for next week. First up, we do have Federal Chair Jerome Powell testifying on Tuesday and Wednesday, so whatever he says in his testimony could set the tone for interest rates, monetary policy, and market sentiment. Then on Wednesday, we also have the Consumer Price Index, better known as CPI. Think of this as a measure of how much more you're paying for goods and services. This is also a barometer of inflation, which could show us how much your everyday items might cost next month. Following that, we also have on Thursday the Producer Price Index, better known as PPI. This data will give us a peek into inflation from the production side, hinting at future consumer price changes. And wrapping up the week, we also have retail sales data. This will reveal whether consumers are spending or saving, a direct indicator of economic health. So by using harmonic patterns, we're going to try to explore how these events might influence market direction. But before we jump into the analysis, if you find this type of content valuable, consider giving the video a like to help out reach more people. Drop your thoughts or questions in the comments below. And if you already haven't done so, please subscribe so you never miss a future video. Having said that, I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. Alright guys, first up here we have SPY. So SPY on Friday did close at $600.77. The intraday high was 608.13, which was also the high of the week. So what can we expect here harmonically for SPY? We don't have anything on the daily just yet, but as I bring up my drawings here, I just wanted to quickly talk about just something that I found interesting here for the SPY that maybe a lot of people also have been seeing on their charts. So this is a very similar setup and also almost very similar situation as to what happened last week on Friday's close, right? So you did have an HSI dot that did generate there, which was off of high volume selling, engulfing the previous candle off of high volume. And this is where you did gap down into Monday because of the tariff news with Canada and Mexico. You went down on Monday, you gapped down, and you went as low as 590.49 before buying all that back up. So similar situation again Friday, no HSI dot that generated, but you did have an engulfing candle from the previous candle close off of high volume. So it's going to be very interesting to see if this actually has the same repetition, because on Friday we did get news on tariffs with China now. So that's something I just wanted to bring you guys' attention. But I wanted to share here the weekly harmonic target because we do have a harmonic target up here. This is a bearish steep crab. As you can tell now, we have two inverted hammer candles, rejection below hop. So it's still not clear whether we're going to come back down to test this retest line here around 582 like you've had in the past, or you're going to find some support and go back up to break to the upside to complete the reaction to the return to hop there at 618.44. Volume did decrease on the weekly, and on the HSI you are approaching that midline. So if you're able to break that, I do think you can go towards the previous all-time high and then an attempt towards hop. But like I said, if this is a similar setup to what happened last week, I do think there might be some retracement here. Maybe even potential gap down depending on what news comes out over the weekend. You could see a gap down, maybe retest the 50 EMA SMA, and that is between 598.30 and 595.99, and even as low as coming back to test maybe Monday's low at 590. There is a retest line there around 589 and change, which is also the entrance of that gap. We also have a rejection here below the HSI midline, right? You should try to break above it, but now because what happened on Friday, you're now finding resistance there. So if the HSI decides to go all the way back to the oversold conditions, I do think that is probably going towards that gap fill all the way to the oversold condition. So right now we don't have anything harmonically we can look at here. I do have a resistance turn support early in the week, which was at 602.48, and on Friday you did close below that. So the next level here I do have is just testing to see if it does a 50 SMA, and then you can look at the maybe the double bottom that you hit on Monday if it decides to get there. We could go over here to the 4-hour. There's nothing here just yet, and I believe in more of the macro here, the 2-hour bat, there is a pattern there to complete the type well, you had a type 1 reactor type 2 return and now back down to potentially target 2 there at 597.47. So it's still it's still dependent on what happens over the weekend and if there's any more tariff news coming on. So definitely keep a close eye out on the SPY. Alright guys, next up we have the triple Qs here. So there is a current harmonic pattern. This is a bearish harmonic butterfly that it has generated here on the daily. So what can we expect here moving forward with this pattern? You can see that it almost tried to come down here for that type 1 reaction, and so far finding support off CD there from the bearish white swan pattern. You kind of looked like you were bull flagging and you tried to break out here, but are still finding some resistance just slightly below hop and previous all-time highs. And on Friday, similar to how the SPY looks here, you did have an engulfing candle of the previous candle right on Thursday off of high volume, and you rejected off of XA there. So what can we expect here to the downside on the triple Qs if you do have some volume coming in on Monday here? So the next level I would be looking at would be around the 50 EMA. As you can tell, this is where it's holding support so far since since late January here, and you could be coming down again. So that's towards 517 and change, and maybe even coming down here and test 511 like you did on Monday and also on Monday the 27th. So it's interesting that you can see that similar on SPY, right? You had Friday HSI arrow here for the Qs gap down, and then on Friday last week, the 31st, you had an HSI dot on SPY, no HSI dot here on the triple Qs, but nonetheless this was high volume and you also gapped down. So does it repeat the same thing for this Monday? We have to wait and see what happens with the whole China and the US tariffs. So but like I said, if it continues to the downside, the next level of support I would look at here will be 517, 511, and then a more macro level here at 503.52, kind of close to where that CD there is at. The HSI is approaching that midline, and I believe if that goes to that midline as a test, that's going to be towards the 50 EMA on the daily here. So if we go over here to the weekly, you can see that there is an ABCD pattern here where you are now 1, 2, 3, about 4, 5, 6, 7 weeks where you have attempted to break above hop, but you are finding resistance here. So we're going to see if that level is going to be resistance, where you can look at the next level would be the 21 EMA to the downside at 508.47, and then that target there at 498.04, where things can get interesting if you lose that level. So targets to the upside on the daily here, if you do find some support, next level harmonically here, the triple Qs has to hold above his XA there. You hold above XA at 525.14, then you could potentially be on your way to test all-time highs and potentially a new all-time high. So again, it's going to be very important to see if we're going to start to break out. There's still a lot of things that are going on with data that comes out this week, earnings, and still the whole tariff war situation. So definitely keep a close eye out on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones closed on Friday at 443.12. With increase in volume, Thursday you did generate that HSI dot, and then on Friday you had follow through, so you could start seeing the volume pick up to the downside. There is a huge retest line here, this HSI dot retest line, where you have tried to break above here and ultimately now failing. So for the like 6, 7 times you have failed, the Dow Jones has failed that area, and you did get that HSI dot. Last HSI dots we did have here back in December, you had a deeper retracement here. So we're going to see if you come back for more downside here on the Dow. The next level is to the downside as I bring on my support lines here and resistance lines. The next level you'd be looking at would be around the 50 SMA, which is around 438 and 437, where the 50 MA is at. I do have a level of support here at 442.72 if it doesn't hold. The next level I'm looking at would be 435. As you can see, the last time you broke above here during November, you had a bit of resistance, came down, grabbed some liquidity, and then you pushed up, had a little bit of resistance there for 442, but then you gapped up and then you lost this level here. So you could come down to 435. Below that, then it gets a little bit more bearish. You have a few gap fills to the downside here around 433 and all the way down here to 425, where there is a retest line here to as a level of support. So you can see that I also have a level of support here at 420.72. This is also a level where it likes to trade between these ranges as well. So 420 to the downside if you continue with some bearish volume. So to our targets to the upside, the next level that needs to hold support is that 442.72. Find support there. look for the volume to pick up and look to retest this line here on 449 and change. Above that, then I do have the previous all-time high at 451, and for potentially a new all-time high at 454.28. One thing I just wanted to bring your attention, there's no harmonic on the weekly here. You can see that's an inverted hammer candle of slight decrease in volume. It did cross the HSI midline. Still no signs if this is going to continue pushing up yet. But something that's interesting here is the 3-day here. I'm going to just clear out some of these drawings really quick. You do have a bearish white swan. You kind of came down here to almost that PT2, but found support, and now you are finding resistance there around that 450 level. So if you start coming down, look to see if it comes down again for 426. Maybe it starts to create a downward momentum, creating lower lows and lower highs if we get bearish sentiment in the market next week with all the data that's coming on, and on the tariff war situation as well. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here. So IWM both had a bullish shark pattern as well as a bullish white swan pattern. And this did come and complete the type 1 reaction on both patterns actually. So it got very bullish here at the completion of both patterns. You came down to T1 there at 229.48, and you also came above T1 there at 225.82 from the white swan pattern. If you find more continuation to the upside, the next level I'd be looking at here for IWM is to get back above 227.13. You can see that you're now trading in this range here between T1 and this other T1 level. A break above T1, I do think the next level you'd be looking at to hit there for the white swan to complete the full reaction would be to 233.13. Above that, the shark calls out for a level at 241.14 where there is a big retest line there. So white swan is obviously calling for more long-term targets there at 253.41. So what does the HSI tell us here for the shark pattern? The shark pattern, you did break above that midline, but now you're kind of reversing, crossing back down to the downside. On Friday, you did generate that HSI dot on IWM off of high volume. So targets to the downside if PT1 fails would be to come back, test this level at 220, and then you can come back down and maybe test, fill that. There's no gap here, but come down here to 200 EMA as a level of support. Failing that, then you can start looking for the type to return to hop there, which is calling for 210. OPR for the white swan is calling for 208, and you do have a gap fill around 212 and change. So if we go over here to the weekly, you can see bearish patterns here. You have a bearish white swan, and you also have a bearish bat pattern on the weekly. Rejection here off of CD there from the white swan pattern. Fail this level, then you're looking at a level of support. Critical level support would be on the weekly is that 50 EMA SMA, and that is currently around 214. Fail that, and you almost came down to complete the bearish type 1 reaction from the bearish bat pattern to T1. You didn't quite get there yet. So if this is failing, this is decreasing volume on this week, you might be heading down there if you continue picking volume to the downside. HSI, very key level there. See if it breaks above that midline. It is at that midline, so it's going to be very important to see if it can break through with volume. Otherwise, you could get rejected and you could come back down to the oversold conditions, and that would be towards T1, maybe even this huge retest line here around 206. So definitely keep a close eye out on IWM. Alright guys, so we have here XLF. So XLF on the daily, you do have a bearish shark pattern that did generate a week ago. And what's kind of crazy that I've been seeing here, the financial sector, specifically the banks have been going on quite the run recently. You had XLF reach all-time highs on Thursday, and then you continued on Friday to continue pushing there. But obviously with the whole tariff news, you had the whole financial sector and basically the whole market come back down. And we're going to see if the banks start giving up some of those gains, because some of these tickers that are like Chase, Schwab, Goldman Sachs, Morgan Stanley, all these Citi are on quite the run right now. Some of these banks are actually making new all-time highs, specifically JPM. So we're going to see if there is some resistance here based off of the financial sector ETF XLF here having this bearish shark pattern, where now you have two rejections here at the 1.13 of the shark pattern at $52.22. So it was high volume selling on Friday. We're going to see if there's follow through. There is a gap to fill here towards $51.69. So if you do gap down on Monday, you have like what's called an island gap reversal, and you have more continuation, maybe to see that terminal bar at 51.44. In my opinion, that's going to be the level to look out for the financial sector ETF. You losing that terminal level there with high volume could potentially mean that a reversal is incoming for that type 1 reaction to target 1 at 49.54. Right now, you can see that it's not even going up towards that HSI midline. It kind of tried to, and now it's looking like it may be curling down. If it decides to reach the oversold conditions, I do believe that could be all the way down to T1 there at 49.54. Targets to the upside, if it manages to just come in gap fill, or maybe even just retest the terminal bar there. If it finds support, the next level you want to break up from this pattern here is at the 1.13. OB is calling 52.22, break above that. Then you make a new all-time high towards HOP at 52.87. If we go over here to the weekly, you can see, based on definition on what you decide, what you think an engulfing candle is, whether you include the candles or just the body. So based on interpretation, if you are interpreting an engulfing candle to just include the body and not the wicks, that is an engulfing candle. But one thing I want to bring your attention to is that it is off of decrease in volume. So you want to see strength of an engulfing candle. Me particularly, you want to have strength in engulfing the whole body and the wick with high volume to suggest strength. So if you were to assume that this is enough strength for you, then you would be looking at this bearish crab pattern as a next target, calling HOP at 54.41. If not, you're coming back down to XA, which is at 49.18, which is where I also have my support line here for XLF. So the pattern that I'm going to be specifically looking at here is that shark pattern. Terminal can get bearish here for that type 1 reaction towards $49 and change. If you break above and hold support above terminal, you start getting volume to the upside, then you're looking for a new all-time high. So pay close attention to XLF, because a lot of things can happen, especially if the banks are starting to give some of those gains. I'll just quickly go over here at JPM so you guys can see how crazy this thing has been moving so far for the past, I could say, since it found support here back in 2022. It's just been going on like quite the run here. Looks almost like a parabolic curve. So definitely we're keeping a close eye on the banks, because the banks could suggest some weakness here and you could be retracing in the market. So keep an eye out on XLF. Jumping over to XLE here, the energy sector here, no current harmonic target. You can see it's been having a quite a bit of a ride, just coming and doing some sine waves here. There's also a case where you could argue that this is a cup and handle here on XLE, so you could see a reaction to the upside. If it decides to pick up on the volume, this thing can go towards potentially previous highs there at 98 and maybe that target there at 101.52. Right now you still are below the 200 SMA and EMA, which ultimately is a little bit bearish here for XLE. You had high amounts of selling here as well as over here, and the push up here was quite decent attempt there, but now it's kind of just hovering back again, whether see if this level holds. In my opinion, if you invalidate that cup and handle, if you come back below 86, 83, so there are no current harmonic targets here. There is a huge retest line here where you are finding a bit of resistance now, and we'll see if this is more follow through to the downside. I have a level here, more macro at 82.51, and bullish macro level would be 101.51. So there's a lot of geopolitical things that could be going on with the energy sector right now, but there is volume coming into this, so definitely keep a close eye on the energy sector. All right, next up, guys, we have Apple. No current harmonic pattern on the daily, so what can we expect here? You do have some harmonic patterns on other time frames that I'm going to bring up just a bit. But one thing I want to share here on the daily first is that we did lose that retest line here. I was calling that around 229, 230, and you did close on Friday at 227. You do have the ex-dividend date here coming in on Monday, so what can we expect here? The next level I'd be looking here to the downside would be the test of the 200 SMA there, which is around 221. It has held the 200 EMA. It did wick down below, but hasn't officially closed below that 200 EMA. So now the 200 EMA and SMA are kind of together. So that's the next level I'd be looking at to see if it finds support below that. You do have a gap to fill around 217, but we do have a dragon pattern we could look at here on the daily. So on the daily, you did lose BC there. We could also take a fib retracement here from the most recent swing high to swing low and see where it got rejected. You did try to push towards that 786, but ultimately you were not able to, and you did close just below the 50% retracement. So you could be heading on its way down for a second impulse wave. This would be a first impulse wave corrective move, and a second impulse wave, you need to come back and make a lower low here, so you could start maybe creating lower lows and lower highs. Obviously still unclear yet, but the next level here that the dragon is calling for a retracement down to the 1272 of the pattern is at 207.51. So on the weekly, we do have a retest line here that is holding just slightly above support. The next level to the downside, you're looking at the 50 EMA, which is around the $218 range, which gives some confidence level there towards the bottom there at around 219 and change. Also the entrance of the gap, and the gap fills around 217, so there's some confluence there. On the daily, you did cross the HSI midline, so if it goes to the oversold conditions, I do think that's towards that gap fill, or maybe even 208.71, which gives confluence to the target on the 2-day, right? 2-day harmonic target there. CD is at 207.51. So that's all I have for Apple here. One thing that some people are also mentioning, that this looks like a potential inverse cup and handle here. Ideally, you don't want to have the handle part go and retrace more than 50% of the whole cup, and that's what it did on this candle. But this was obviously high volume due to earnings, but it is looking like a cup and handle, an inverse cup and handle, and if that plays out, you have a major retracement if that plays out. You could also argue that on the 3-day, you could see more so like also a head and shoulders pattern, right? I think you could see it on the weekly as well. A little bit of a head and shoulders, more clear on the 3-day, right? You have left shoulder here, the head, and then the right shoulder. Like I said, the wick did kind of invalidate those troughs there, or excuse me, those peaks, but the close, if you look at the close for the shoulders, the peak of the shoulders, then you're kind of in that range where this is a head and shoulders pattern, and the neckline could be where that retest line, or more so over here around 220, 221. So below that, then you have a deeper retracement, and we could start looking at the weekly targets here. 207.09 is OPR of the previous dragon pattern where you did go up. This obviously invalidated it because you pushed way above OPR, but you can also look for those levels as support, and that would give just confluence to the downside based off the bearish dragon pattern on the 2-day. So definitely keep a close eye out on Apple. Jumping over to Microsoft here, guys. So Microsoft, no current harmonic pattern on the daily. You did have this bad pattern, but you kind of went over past the 30-bar rule. One thing to note is that Friday you had high amount of selling on Microsoft, right? In my opinion, the whole market, specifically into Wednesday, Thursday, I thought you had very low volume push, and that the volume looked suspect to the upside, very weak volume. And similar at Microsoft, looked exactly the same thing. You had a push up, but rejection on Friday, and you did come down here off of high volume, and you did lose the 200 SMA there. So it has lost the 200 EMA SMA. Over here, you can see that it has gone down to like 406, and even back in August, it went all the way down here to 386. So that's the next level I'm going to be looking at here, towards that $400 psychological level. It is picking up some volume to the downside. The HSI started to curl up here at the end of the week, and unfortunately it's now kind of just moved, potentially curling back down. So if this goes to the oversold conditions, I could see maybe 399, and then some targets here back down to a more macro level at 386. On the weekly here, you could see that it lost the 50 EMA. You also lost the retest line there, which was around 414. So you have this potential shooting star candle. It is weak volume here on the weekly, but it did lose the 50 SMA, excuse me, the 50 EMA with the 921 crossover to the downside. So this could be coming down here. Maybe you have a triple bottom, you could argue. You already had a bottom here, second bottom here, and a third bottom here on Microsoft. So targets to the upside where you need to reclaim this to get bullish back again is obviously reclaim the 200 EMA SMA. That's around 419, 420, call it. And you're going to have a bunch of resistance here between 420, 419, and 427. A break above that, then you could see 433. You can get back bullish to retest all-time highs, maybe 457, and then all-time highs. So There is calling for a target there at 468.35, but that is obviously off the table for the time being, especially since you did lose this range here at 433, and you're now losing the 200 SMA off increase in volume. So the volume to the downside based off of earnings was supported because it did pick up, and then the volume in an attempt to start pushing back up was low volume, and you had met with bearish volume, high volume selling on Friday. And this could again all be due to tariffs and all the situation that's going on with China and the US. So definitely keep a close eye out on Microsoft. Jumping over to Amazon here. So Amazon currently has this bearish decrab on the daily. As you can see, XA there around 231.85 is a level of resistance. You did generate on Friday high volume HSI dot, but ultimately holding support after that retest line around 228. Obviously, Amazon did have earnings. You had a beat there by 25% on EPS and a 0.26% beat on revenue. So Amazon, in my opinion, I said it before in my previous weekly videos, that Amazon looked very bullish to the upside to start looking for a higher high and new all-time highs, and that's exactly what it did prior to earnings release. So it looks like that's what they priced in, a move to the upside and then profit taking on earnings. So what can we expect here for Amazon? If you lose that retest line, the next level of support, you come down here to that 50 EMA there on 224, maybe PT3 there from the bullish black swan there at 221.38. Below that, then you have quite a bit of retracement to come down here for a potential type 1 reaction off of decrab. Still not clear if it's going to come down yet. We did generate that HSI dot. So last time we generated HSI dot here was back in December, and you kind of retrace here just slightly from the top there all the way down to 7%. So let's just assume maybe that's what it does. Again, 7%. That's roughly around 217. Kind of maybe even entrance of that gap there. So there is a gap to fill around 215, 214 and change. I do have a level of support there at 214.69. Below that, obviously increase in volume and all that, then you have that opportunity for a type 1 reaction, which is calling T1 at 201.91. So a lot of gap fills to fill here to the downside. That HSI dot retest line, and specifically here around 216, 223, 221 here is going to be the level to watch out for Amazon if it's going to give you that type 1 reaction. Otherwise, if it finds support here around 228, the next level it needs to reclaim here is 231. Have that gap to fill there around 235 and change. That it gap down on from Thursday into Friday open, and then attempt for a new all-time high there around 240, 252, and then to complete the type 2 return to hop there at 253.27. So definitely keep a close eye on Amazon, because if this HSI dot is signaling the start of a potential retracement, we could be potentially going down to that T1 down the line. So keep a close eye out on Amazon. All right, guys, jumping over to Tesla here. So Tesla on Friday did close at 361.62. A little bit disappointed there that I closed my 375 puts for those Friday contracts. Because if I would have held, it would have actually been a very good payday there. But it is what it is. I still got out green in that trade. But I did see that retracement, and that's stemming from the 1 hour that I was looking at here prior, 2 hour. So looking at the 2 hour here, you had a bearish shark pattern. I got in on these on Friday when you did lose OB there. So you also lost the terminal bar here off that pattern. That terminal bar is always a key level here harmonically. You lose that terminal bar, whether it be from the bullish reaction or the bearish reaction of the harmonic pattern that you're currently looking at. It is an accelerated move in my opinion, where you start looking towards that hop return, and then even worse, something more macro, and this is exactly what's happening now for Tesla. If we go over here to the 2-day, you do have a bearish decrab that is calling for a retracement down to 340.81, which is just slightly above that 50 SMA. You have similar targets here on the 3-day as well, 347.58 with another harmonic target. And the weekly, you have an ABCD pattern. The ABCD pattern here on the weekly, you had a shooting star, a shooting star here after rejection of point D here, and you are not able to reclaim ABCD there at 469.77, and you are looking down for a potential type 1 reaction off this weekly pattern, which is calling 319.69. There are quite the gaps to fill here, but first for the weekly target, you're looking at to see what happens at the 21 EMA there around 352, because there is a potential movement to the downside, if this starts failing these levels, you have a few gaps to fill here at 358, around 348, as well as 324. The 200 EMA is around 300, and you have more gaps to fill here to the downside. So volume, how do we interpret this as volume? Is it a support to move down? Let me just clear this out really quick. The volume on Friday suggests, it's decent. It was decreased in volume, but that did print a shooting star on the daily. So we want to see, in the bearish case, if you are going to look for Tesla to come down, you want to see follow through with high volume, because the volume on Friday was kind of low. You did have an attempt there with the HSI dot that did form on the daily here, which was doing a check back to a previous HSI arrow off of high volume. So you could bounce again and reclaim some levels. So some of those levels that you need to reclaim on Teslas, definitely get above that 50, which is around 384, and you could be looking to go for the next target around 401, where there is that gap fill, ultimately reclaiming that 50 SMA there on the daily above that. Then you're looking towards those targets to the upside, where you have a huge retest line there at 452, where there is a gap fill. So we'll be looking at those targets if we can get up there first. Otherwise, for the bearish case scenario, you want to see high volume continuation selling to see if that accelerates these moves to the downside on those 2-day, 3-day, weekly targets. So definitely keep a close eye out on Tesla. Alright guys, jumping over to Google here. So Google on the daily currently has quite the chart here with two bearish harmonic patterns, a bearish butterfly and a bearish dragon pattern here. So Google did have earnings and it did beat on EPS but missed slightly on revenue, and you did gap down here. So what can we expect? The white swan is calling down to PT1 there at 190.49, and it looks like it's heading down its way towards PT2 there at 180.26, but it is finding support off the butterfly pattern target 1 there, which completed the type 1 reaction. So what can we expect here? If there is more downside here, the next level I'd be looking at would be that 180.26 to complete the white swan. Below that, then you have the 200 SMA and the 200 EMA roughly between 173 175. You do have T2 for the butterfly pattern at 169.47. HSI did cross the midline, and if it decides to go to the oversold conditions, I could bet that that's towards the 200, maybe even the completion of the target, the type 1 reaction all the way to target 2 there at 169.47. Levels that it needs to hold support above here: T1 183, reclaim the 50 SMA there on 190, and then start on its way to close that gap, which is around 203. Level of support, if you decide to break this level here at 193.70, that's the level of support that you need to hold in order for you to start looking for that type 2 return to hop there around 210 and 215. Otherwise, I do think you might be coming down and accelerating here based off the high amount of selling that happened on Friday. So if we go over here to the weekly, you can see that we formed an HSI arrow off of high volume. Obviously the high volume, you're going to get it with earnings here, since Google did have earnings, and it did hold support above that ABCD target there at 184.44 and the 21 EMA. So the HSI arrow could signal reversal is incoming to maybe play out this type 1 reaction towards T1 down the line. Obviously that's a little bit too far out to tell, but it is potentially showing some signs that a reversal is incoming. So definitely want to watch out for these levels to the downside. That 50 SMA is going to be the most important one in my opinion at 170. So that's where it has held support here for Google. You could just come back down here to just create a higher low, right? You created a higher high in this upwards channel. You created a higher low back here in September, all-time highs, which is a higher high here. And then you might be coming down for a higher low to grab some liquidity, and then for another attempt down the line. So that's still not clear as of yet. We're going to have to see what the data shows and this whole thing about tariffs. So definitely keep a close eye out on Google. Alright guys, jumping over to Meta here. So Meta on the daily currently has this bearish sea crab. It continued pushing pretty high this whole week. It went as high as 725.01 on Friday before closing at 714.52. So what can we expect here looking at Meta within this harmonic pattern here? You did go above Hop there. Hop is calling for a 699.72 target. Right now you're having a bit of candlestick formations here where it looks like it wants to potentially reverse here. You did have this shooting star here on Friday with high volume. So the RSI, HSI, and the MPRSI are all completely overbought here. So you could be looking for a reversal, but in order for that to to show strength in that reversal, I think you need a few days here for continuation to the downside to suggest that shooting star here was actually a reversal here. So you're also looking for that HSI arrow to trigger. So the next level to the downside you're looking here for Meta would be to come back down to Hop, right? Hop is at 699.72. Below that, then you could start maybe your descent towards that type 1 reaction all the way to T1 at 643.39. One thing to note here on the weekly, share really quick. The weekly has been decreasing on volume. Obviously, you had earnings the week before, but on the weekly, you're also approaching overbought conditions within the HSI, the amplified RSI, and the RSI. So a top could be incoming. I do have a fib retracement from, the most recent swing high here back in December to the lows here in December as well. You have a fib retracement that's calling for the next target up there at 732.89, and it's currently at 714, where it did go as high as 725. So if it continues, it might actually just overextend past or to 732 or even higher, and then maybe reject somewhere there. I do have 863.65 as a fib retracement level from previous all-time highs, right where before you had that major dump here back from 2021 to the lows. The lows here is 88.09, where you trace through the 2618 of this whole movement back up is calling for 863.85. It blew past 567, which was a 1618, and now it is getting just almost close to that 2618, halfway through the 1618 here towards that 2618. So Meta can still continue pushing up higher. There is a lot of strength in the stock right now, in my opinion. You could start to consolidate up here as well to find a new range profile, but ultimately right now for the downside, in order for you to get even start for a type 1 reaction, I think you need to come down below XA here at 674.49. Otherwise, you could just come back down, grab some liquidity here at Hop, and then find support and then start pushing to the upside. So it does need to be, it's a little bit overbought here. It does need to cool a bit in my opinion, so it wouldn't surprise me if you start seeing a bit of retracement here on Meta, but ultimately we'll have to wait and see if that is going to be the case. So definitely keep a close eye out on Meta. Alright guys, jumping over to Netflix here. So Netflix on the daily, currently no harmonic pattern so far. I am going to bring some of my levels here. So Netflix here has actually continued pushing up here. We did have a harmonic from a long time ago where the monthly was calling a $1,000 target at PT3 from a bullish white swan, and right now you're way above 1,000. So I do have a level of resistance here based on a favorite retracement that I drew back a while ago at 1,033.65. It did get close to it on Friday where it did go to 1,027. Ultimately you close here with an indecision candle, which could suggest maybe a reversal or a retracement is incoming. One of the levels I'm going to be watching out for here is the entrance of the gap, basically around 953. I do have a level of support at 938, 921, and below 921 you can get a little bit more bearish here into 847. As you could tell, last time you had a bit of resistance here, you came all the way down to 847, but ultimately you're still trying to find a top here first on Netflix. The RSI, HSI, and amplified RSI are still completely overbought now, but no HSI arrow so far. You might be triggering an HSI dot if you come and retest this area here where the HSI arrow previously was formed. On the weekly here, you can see that the weekly actually has more strength based on the harmonic strength index here crossing that midline. This could potentially mean more upside here on Netflix in the long term, right? The volume on the weekly actually increased prior to the previous week, and the earnings, right? Earnings was obviously high volume. When you have earnings, you will always come with high volume. So the week after earnings, you had continuation, slight volume, right? Even higher than previous the week of earnings. So you still had higher volume, and then just this week we had an increase. So Netflix is looking like it wants to continue pushing on upwards here. So we're gonna wait and see if it breaks above 1,033. Above that, then you're looking at 1,100. So very strong right now. Netflix, just like Meta, continuing to the upside here. So levels to the downside, like I said, you're looking for this to come back down to at least the entrance of the gap, and then you have this HSI dot retest line here around 928ish and change. Below that, you could look to go bearish here at 921, where you can come back down to 847. After that, then you start looking at more macro levels, but ultimately still we're not there yet. We're gonna have to wait to see if this actually retraces. You want follow through and the next days to come to signal that indecision candle, this doji candle, is the signal of a reversal. But if not, then you might be pushing even higher. So definitely keep a close eye out on Netflix. All right, guys, jumping over to NVDA here. So NVDA currently has its alt bat pattern on the daily, where you could see that it gapped down below target 2 and it dropped it all the way down to the 200 moving averages. And on Monday, we did open up all the way down. We opened up at 114.75, but we did go as low as 113, way below the 200 moving averages, and did start to find some support above here and reclaim the 200 moving averages again. So what can we expect here on NVIDIA? Looking at the HSI here, you did cross the line with some harmonic buying. You want to see more volume come in to suggest that this is actually trying to close that gap here. So that gap is going to be closed around 141.88. I do have an HSI dot retest line there. Ultimately, what you want to get above is 144.71. After getting above that level and serve as support, you can start looking for previous all-time highs and maybe new all-time highs. If you get rejected here at 132.66, the next level to watch out for is 120.88. If you lose 120.88, it does trade. It does like to go down here to trade between that range of 120 and 97, just like it did here prior a few times here back in August and in September. So this is going to be a range to watch. If you get rejected below 132.66, then maybe you come back down to test the 200 moving averages again, where that white swan PT2 target is at. If we go over here really quick to the weekly, that's interesting. You do have a bearish dragon pattern here, where you are finding bearish resistance here at that BC target of the pattern at the 886, which is at 135.01. This weekly close is an engulfing candle. You did engulf the whole body and wick of the candle here, so that could suggest bullish momentum. The only problem I have with that is it's on decreasing volume compared to the previous close. So I'm not too sure if this is actually indicating that the reversal to the upside is coming. I do want to see if this is the case. Continue with high volume next week to suggest that. Otherwise, I do think that may be a bull trap, and you might be coming down to lose that 50 EMA here. You lose that 50 EMA, and specifically CD there, which is 119.71. Then you can come down for the type 1 reaction of the dragon pattern at $90.69. So right now NVIDIA, it is trying to hold above the 200. It has quite a few attempts here to try and lose that level, but ultimately it is holding support above it for the time being. So we definitely have to keep an eye out on NVIDIA, because if this thing starts to reject and lose some key critical levels, the market could be coming down to the downside pretty significantly here. So definitely keep a close eye out on NVIDIA. All right, guys, jumping over to Bitcoin here. So Bitcoin on the daily, no current harmonic pattern here. We do have this pattern here, but it's above past the 30 bar rule. So what can we expect here for Bitcoin? You're still trying to find a break above 101,000 here. I do have that as a level of resistance. Anytime it has come up here, it has found some resistance here. So you did form an HSI dot retest line there at 104, because you did try to push up here at the end of January, but ultimately was not able to hold above 101K. And you did come down all the way down to 91,000, but finding support at this retest line. So you can now be trading in this range here between these retest line here until you either break up to the downside. Failing this level, you can start looking really quick for that type 1 reaction to target 1, or if you break above it, you can start looking for new all-time highs. If we go over to the 3-day, you can see it has a bearish scrap pattern where hop is still a level of support. Key level there would be terminal bar there at 93.2K. You have come down. You can come down to that towards that XA target there at 86.2K, where the F50 SMA is at, and below that you have the completion of type 1 reaction towards T1 at 76.3K. The weekly here, an indecision candle. This is going to close in 21 hours. So that there is an HSI dot now forming on this weekly candle here. So that could suggest that reversal is incoming to the downside. We have to wait and see. We can look at a previous time where you did form an HSI arrow here. You did push higher, and you were not able to push above the previous all-time high here, which was the all-time high there was around 73.7K, and then you formed the HSI dot, and then you did retrace slightly down here. So you ended up retracing a little bit further down here as to 54K from the high there at 72.7K. Could this be the same scenario? You can come back down towards, I believe, maybe 73K, who knows, to meet back to this air range again. So that's going to be a key level to watch, to see if this is going to be an indecision candle, meaning maybe volume is going to start picking up to the downside as a weekly is starting to increase here. We're going to see if this actually goes even higher in the next 21 hours. So a reversal could be incoming if you find support above the 90 mid, and you're looking again that 101k and then previous all-time high. So we're gonna have to just wait and see what Bitcoin does. So definitely keep a close eye on Bitcoin. All right, guys, so that's it for me. I will be streaming same time as always. I do stream from Monday to Friday from market open to market close. So if you're interested in watching me stream, link to my Twitch in the description box below. Having said that, that's all I have for you guys. I hope you guys have a good rest of your weekend. Enjoy your Super Bowl Sunday with your family and friends, and I will see you guys bright and early on Monday. Take care, everybody, and peace.